I think Nvidia is an underrated AI stock, and I'm going to tell you exactly why in the next 5 minutes. Let's begin. First, let's try to understand how Nvidia makes money in the age of AI. Nvidia sells high performance graphics processing units or GPUs, specialized chips that are crunching the math behind video games and modern artificial intelligence workloads. Thanks to its proprietary CUDA software ecosystem, those GPUs have become the de facto standard for training and running large AI models in the cloud data centers. Beyond the cloud, Nvidia offers full stack performance for robotics, healthcare, and autonomous vehicles, and a lot of other industries as well, each bundling hardware, AI tools, simulation software, and development tools so customers and developers can build intelligent machines faster. The company's secret sauce is that every new product feeds data back into NVIDIA's ecosystem, tightening the moat and making it harder for rivals to dislodge its lead. Now let's look at overall performance. Long-term shareholders have already enjoyed a wild ride, yet the numbers still impress. As of mid-June 2025, Nvidia's market cap hovers at around $3.6-3.7 trillion dollars. Yes, a trillion with the T. Now, in the latest quarter of quarter one of fiscal year 2026, revenue surged 69% year over year to $44.1 billion, with the data center segment alone contributing $39.1 billion. Trailing PE is a bit lofty in the high 40s, but the forward PE is already down to the low 30s as earnings catch up. Management also touts a $14 billion automotive design win pipeline, hinting at acceleration to come. Put differently, investors are paying up, but not quite as much as you expect for growth at this magnitude. Now I want to take a closer look at three bull cases, three reasons that upside is bigger than it looks, especially in the AI market for this massively trillion-dollar company. First is the AI compute monopoly. Every hyperscale cloud, AWS, Azure, Google, Oracle, rents NVIDIA's latest Hopper and Blackwell chip. The dominance is sticky because developers have spent years coding for CUDA. Ripping it out is like switching an operating system mid-flight. Not advisable. With the AI model counts exploding and inference nodes increasing, demand for NVIDIA silicon still outstrips supply, giving the company pricing power and eye-watering gross margins in the low 70 range so far. The second is new market opportunities like robotics, healthcare, and edge optionality. While Wall Street obsessively models cloud sales, NVIDIA is quietly embedding itself in industrial robots, surgical devices, and smart factories. Siemens, Teradyne's Universal Robots, and BYD have all adopted the ISIC platform to simulate and deploy millions of autonomous machines in the industrial space. Hospitals and pharma giants such as Mayo Clinic and Novo Nordisk use Clara or BioNemo to accelerate diagnostic and drug discovery. These verticals are only now entering the revenue line, offering what Jensen Huang calls decades of runway. Finally, it's just valuation compression through hypergrowth. A forward PE in the low 30s looks steep until you notice consensus expect earnings to more than double again by 2027 and 2028, which could put the multiples into the mid 20s without the share price moving an inch. If management sustains its current cadence of strong double-digit revenue growth, as we saw last quarter, Nvidia could look almost cheap on a peg basis by 2028. Investors get the best of both worlds, a mega cap stability and mid cap growth. Now, there's obviously a bear case, and the biggest risk over the next 5 years is competition and policy. I mean, AMD's MI300 and MI400 accelerators. You also have homegrown silicon from Google, Amazon, and Microsoft, all aimed to chip away at NVIDIA's share. No pun intended. At the same time, US export rules already knocked an estimated $8 billion of sales this quarter, with being a $50 billion total addressable market. And management took a massive hit due to this overall ban. If cloud providers curb spending or governments tight restrictions further to newer countries, NVIDIA's hypergrowth narrative could hit a speed bump, shrinking both volumes and margin, just as the stock valuation still leans forward. Now, a quick recap of why I still call it underrated. Nvidia commands a huge moat in AI compute thanks to its CUDA ecosystem. Its growth opportunity spans in clouds, robotics, healthcare, and autonomous vehicles. And valuation compression could make today's prices tag look conservative by 2030. The flip side is clear. Regulatory landmines and credible rivals could blunt the trajectory. Still, my base case is Nvidia continues compounding AI dominance faster than the pessimists expect, making it an underrated play even at $1 trillion scale. So there you have it. That's why I believe Nvidia is an underrated AI stock. Now, what do you think? Tell me why I'm right or wrong in the comments. And don't forget to like and subscribe. Go to fool.com/invest to receive the top 10 best stocks to buy now.